Bitcoin at $10,000. This is not just clickbait. This is a forecast from a Bloomberg strategist that you need to hear. While the market celebrates that Japan did not change the rate yesterday, gold is storming 5,000 and silver cost $103. When just rocks are beating technology, this is a major alarm signal. Digital assets are left behind because liquidity is drying up. Analyst Mike McGlone is sure we are on the path of 2008. The Bitcoin ETF launch was the peak. The deal is officially over. Daily market review, January 24th, Saturday. Yesterday, the Bank of Japan left the rate at 0.75%. Markets relaxed, but it was a mistake. This is a hawkish pose. In March, they will raise the rate to 1%. The global tap of cheap money, the carry rate, will continue to close. This cheap money fueled the crypto market for years. Now the tap is turning off. In contrast to this pressure, CZ talks about a super cycle in 2026 because of new US law.
I have very strong feelings that it will probably be a super cycle.
Be a super cycle?
2026, yeah.
For Bitcoin?
For Bitcoin.
But we know he loves to trap the crowd in long positions at the very top. Friends, if I'm saving your time and nerves, hit the like button. Let's look at the on-chain data because data does not lie. Inside the blockchain, we see a bearish convergence. It's like being on a plane where all the red warning lights are flashing, but the stewardess smiles and brings you coffee. Demand has gone into the deep red zone. Old holders are selling coins faster than the market can buy them. Whales and dolphins are moving to cash. American institutions have no appetite at all. The Coinbase Premium Index is deep in the negative zone. Yesterday's pump to $91,200 worked perfectly, just as I predicted in the last video. By simple logic, a local growth to 91,000 is possible today, but remember, this growth was only because of the pain of short sellers. $200 million were liquidated. There is no real buyer behind this move. Upside for today, 90,600. Maximum pump, 91,900. The nearest local support is 88,300. From there, we might go up to 93,500 to grab liquidity. Because on the liquidation maps, we have two big levels, 93,500 at the top and 86,500 at the bottom. Price will try to hit both. The heat map shows it clearly. We took 91,200 and immediately dropped. The nearest level below is 88,300. This matches my volatility indicator. Max Pain also points to exactly these levels, 93,500 and 88,300. Ethereum levels are on the screen now. The situation on exchanges is critical. On Binance, 70% of people are in longs. On Hyperliquid, there are 2.2 times more longers than shorters, but the short sellers have bigger position sizes, while the longs have the margin. This is perfect fuel for a squeeze down. In crypto, there is no get-rich-quick button. Only cold calculation survives here. Subscribe if you want to see the market without rose-colored glasses.